Well, once again, thanks for having me. I really appreciate the opportunity and appreciate everybody being here today. I am recording this, so there will be a replay available for everybody. I'll probably post it on my YouTube channel and then get some links to Josh and Toodegrees so that they can post it as well. Yeah, other than that, let's get rock and rolling. So yeah, I got Bitcoin on my chart right now, but let me go to my deck. Anyone that's been to any of my previous live streams here knows I love to make decks and I love to present. So yeah, if you don't know who I am, Trader X Kira. I'm currently a funded futures trader. I refer to myself now as a former crypto degen because after trading the NASDAQ and CL and GC, I've honestly like fallen in love with the process of trading futures. I love the way ICT concepts are very well respected when it comes to trading these types of assets. If I try to start using it with crypto, it gets a little bit dicey, right? Because there's low volume, there's high volatility, but low volume, which leads to a lot of manipulation. So setups don't get respected the way they might be fully respected when we trade NQ. It doesn't mean you can't trade ICT concepts with crypto, but like I said, in terms of kind of taking more of the gambling approach with the memes and jumping on hype and all these other types of concepts, right? A lot has changed in that industry, but for me now, I'm more of a spot holder, and that's kind of what I was saying at the top of the when we all logged in here that I wish crypto was going higher instead of lower. But if I think about it, Bitcoin went from $16,000 to like 120 something. I think it did almost an 8x moves from the bottom. So I mean, that's pretty impressive if you think about it. I think that's doing better in terms of that ROI versus gold. Even though gold is all the rage right now, silver is now starting to catch up. If you think of that actual X factor, Bitcoin actually did more in less time. Actually, maybe I shouldn't say less time, but it did more for sure. So anyways, that's who I am. If you have any questions, you can obviously drop it in the chat at any time. I got it open here, so keep an eye on it. And of course, I know Josh is here as well. So the agenda for today. Yeah, sorry, go on. Sweet, thanks, brother. So the agenda for today, a lot of what we're going to talk about is basically just how I'm trading. So if anyone knows who I am, I'm trading. Like I've literally gone all in on trading IFVGs. I've had a pretty wild ride, I would say. I think when I first came into the futures landscape, I was introduced to NQ basically through Ash Trades. And I was trading like a 2022 mentorship model style, but I was using a CFD prop firm trading NAS 100. And then when I started learning about the unicorn, I realized, oh, this is pretty similar to what I'm trading now, but I just didn't understand a lot of the other concepts. And this was a few years ago. So I spent a good amount of time studying off of Ash Trades, trying to really understand concepts of drawn liquidity, understanding how to use the higher time frame and align it with the lower time frame. I never knew any of that stuff. So that whole roller coaster of a ride has kind of allowed me to start to test different things. And I think that's important for traders. You got to explore, you got to learn, you got to expand. Now, it depends on who you are, I guess, but for myself, and I guess I can only speak for myself, when I start to learn something, I like to go like way deep down into the rabbit hole. Like I like to know everything, like inside out, especially if it really starts to intrigue me. And that's what happened with a lot of ICT stuff. Is it really started to intrigue me. And then when I started to learn more about Toodegrees and the indicators that they provide, the first thing that kind of crossed my path was the stat map. And I was absolutely blown away with an indicator like that. And once again, deep dive into it, started to study it, started to implement it into the charts, see how it responded. And once again, it's all about trial and error. Like you don't know what's going to work for you unless you start to show up to the live price action and start implementing things and then journaling them and then kind of reviewing them at the end of the day, at the end of the week, at the end of the month to see like what's working, is it like what's worth it. So I did a lot of that. Started learning all types of different models, to be honest with you, just like probably anybody else. You know, like I wouldn't say I was strategy hopping. I was, because like I knew what I was doing. I was studying. I was learning, and you know I found success doing a lot of things. Truth be told, but you know if something doesn't feel 100% right, then it's kind of hard to continue to, you know, execute in that manner because you feel kind of off. So for me with unicorns, for example, I started off trading it on the 5 minute, and then it started to feel off because there wasn't very many trades. It's not to say the unicorn doesn't work, because it works perfectly fine. But the problem was me, right? Not the actual technical side of things. It didn't resonate with everything I started to learn, and then coming from like that crypto, you know, background. Like I'm used to like high volatility, you know, quick gains, fast and ferocious, you know, high adrenaline. Like that's kind of where I came from. And so when I come into trading 5 minute unicorns, like it's now like hit the brakes, you know, have discipline, you know, don't execute unless it's A plus, you know, things like that. I had to really shift my mindset, and it was good for a while up until it wasn't, because then I started noticing I'm now not in a trade for like 2 weeks, and then I finally see a trade, and then I have performance anxiety because I haven't taken a trade in 2 weeks, and now what looks like an A plus trade sets up, and I'm second guessing myself, and guess what? I don't take the trade, and it goes crazy. And then I only have myself to kind of blame, right? So I was running into a lot of these types of psychological mindset type of issues. And once again, it's not the technical thing. It's always going to be yourself. You're always going to be battling yourself. But nonetheless, continue to journal, continue to implement different concepts, you know, C2, unicorns. And then I think when Toodegrees launched the IFEG Pro Plus indicator, probably towards what, the end of last year, I'd say? Or was it the year before? I can't even remember, man. Do you remember when it was, Josh? Of last year, right? Yeah. So I remember when you guys came out with that indicator, and one of the other awesome traders is part of Unicorn University, and I think he's part of Toodegrees too. Eat More Chicken, EMC is what we call him. But I've known him for a long time now, and I saw him using it, and I was just like, holy crap, that indicator is amazing. And IFEGs, I don't even know much about this. So once again, like I said at the top, I'm a student of the game. Like I studied my ass off about this stuff, and using the indicator helped me because it plots things on the chart for you. So it helped me to accelerate my learning curve about the indicator itself and the concepts behind trading an IFEG. But what happened since then was, you know, once again, it was just like, you know, trial and error, going back through my journal, was making a lot of mistakes. Some things were working, some things weren't. So it's a matter of trying to like fine tune things. So I started to explore some other concepts like SSMT using the Toodegrees day quarterly theory indicator, and, you know, still, you know, learning more things. But what happened is after doing some review with how I was trading with SSMT on NQ, for example, I just noticed that towards the end of the month, the gains and the returns I was getting compared to the amount of stress and the amount of energy I was putting into the actual trading day, it wasn't adding up for me, right? And this is what I was saying once again at the top. Like, you only start to understand more about your, like, what works for you and the system that might work for you. And it goes beyond the whole concepts of being profitable with the system, because you can be profitable with any system. But if the system is like stressing you out, then it's not really going to help you in the long run. And this is where you have to really understand yourself in that way. So for me, I started to kind of go back to the drawing board, and I started to think about like, okay, like what is my trading personality? And I would ask you the same question. Like, if you should ask yourself that, like, what is your trading personality? Are you high risk? Are you medium risk? Are you low risk? What time frame do you like to trade on, right? So do you like the fast pace? Do you like the slow pace? So for me, a lot of those questions that I was asking myself were leading me to the 1 minute time frame, but also trading something that, you know, I wasn't going to be in a trade for like, you know, 30 minutes to an hour. Like I wanted to be in a trade for like 10 minutes, and get in and out. So whether I win or lose, I know within 10 minutes. Because there's nothing worse for me where you're in a trade for like an hour and it's going up and down, and then all of a sudden it takes you out. That's a lot of, emotional ups and downs to go through. And by the time that session's over, I would just be a wreck. And I have a life outside of trading, just like I'm sure everyone else does. But you kind of carry that baggage with you into your real life. So like, I'll give you an example. If I had a bad day, like it impacts the rest of my day, and my wife and my kids are there and they know like what's going on. They're like, oh, Papa didn't have a win today or something like that, right? Like, because I'd just be thinking about like what I did wrong or what could I have done better, right? I'm sure many of you can probably, relate to that. So having to go back to the drawing board, I started to then reassess, like I said, what is my trading personality like and what complements my trading personality? And what I kind of started to land back onto was, once again, trading on the 1 minute time frame. Also not trading a billion assets, right? Like I was trading everything under the sun, NQ, ES, GC, CL, 6E. That's a lot of assets to manage during a New York AM kill zone session. So I kind of told myself, I'm only gonna trade NQ. It's just gonna be NQ or nothing. I don't even care if it's the ES trade that works out. Like I'm only gonna touch NQ. So what that's done is it's allowed me to just focus on one asset now and focus on it with 100% attention. Do I still need to look at ES? Of course, and we'll get into that in a sec. But my primary focus and attention is going on to NQ and what NQ is doing. So once I figured out the asset, then I was like, okay, I know the time frame. I'm going to be on the 1 minute time frame. And the reason this is important is because you're creating like a business plan for yourself. And if you don't understand what I mean by that, I basically just mean like it's your game plan, right? Like you have to have something to fall back on to remind you of like what you're trading, why you're trading that specific way, and what your goal is. So for me, once again, NQ, 1 minute time frame, I'm a reversal trader. This brings me up to the next point, which is, are you a continuation trader or are you a reversal trader? Now, you can be both, of course, but myself, trading unicorns, and even prior to that, trading a 2022 mentorship model, everything's basically, the market maker model, right? Like it's just like, what part of that market maker model are you going to trade? So for me, I knew reversals 100% was where I'm at, because when I was trading crypto, we're trying to like snipe the absolute bottom and we're trying to like take profit at the absolute top. And I know it sounds stupid, but if I take that kind of mentality and I transition it to, the world of futures trading with a more mature outlook, more professional outlook, I understand that my goal is to actually trade reversal patterns. And reversal patterns, once again, can only appear in specific ways. And this leads me to the next thing, which is like, we need to know where the buy side liquidity is, and we need to know where the sell side liquidity is. There's FVGs, of course, in the mix, but what I started learning with FVGs for me was that if an FVG has a specific range, like let's say the range on NQ is like, let's say the range is 50 points. Like price can do anything inside of those 50 points. Whereas if you have like a specific buy side liquidity level or a sell side liquidity level, and I'm referring to like, swing points, I'm referring to external range liquidity. This is like a line in the sand, right? You can immediately see how price is going to react at that specific level. So once I started putting all this together, and then I started diving even further, I started to realize like, what is one of the most quick, fast ways to get in and out of a trade with a specific execution trigger. And that led me back to the world of IFVGs. So then I started diving back into IFVGs and trying to figure out more about how I want to trade the IFVGs, and I started studying more. There's a lot of amazing traders that are out on Twitter that are probably inside this Discord and other Discords, but my point is like, you have to also figure out like, if you're going to study off someone, like make sure the concepts are working with you, and you have to then go and test it yourself, right? So I started learning more about what defines like a A plus FEG versus something that's like not A plus. And these are things I didn't understand when I first started trying to trade FEGs and learning about them. I didn't know about this. And you know, it's just my own learning curve, right? Some people might be like, oh, how could you not have known that? But that's okay, right? Like, it's just a learning curve. So as I start putting things together, I started to feel really good with the way I'm trading. It starts to make sense. It starts to feel comfortable. I'm not stressed out anymore. I think, once again, the biggest challenges we always have are FOMO, panic, you know, having weak hands, not sticking to a plan. And you know, I'm a scholar, trader, analyst, whatever you want to call it, inside Unicorn University with Ash. And inside the public side, you know, I started a plus 20 trades challenge just for everybody who wants to join, because I thought, you know what, this will benefit me too, because it's going to force me to try to only take A plus trades and stick to my plan. So I'll go into that in a little while, but let's go back to the concepts of the IFEG, so, and the way I'm trading. So the first thing I had to do is figure out filters. Now that I have all those other, you know, more major things like checked off in terms of a plan, I was like, okay, well, I still need to be, like, I have to know when I'm going to take a long and when I'm going to take a short, right? If I'm just trading these external range liquidities, what happens if that external range liquidity is in like premium? So I had to learn about creating, or like learning more about a filter to use to help me figure out, how do I know when I'm on the right side of premium and discount? And I came across something called the daily EQ, daily range EQ. And this is how I form my trading bias. So we're going to start there. And I'll just quickly go to the chart now for NQ. And I'm just going to rewind this thing back to the start of today. Okay, so this is about 9:30. So when I show up to the chart in the morning, I'm usually at my desk around 8:30. Okay, and the very first thing I do is I want to know where this daily EQ range is. Now, how do you calculate and figure out where this daily EQ range is? Because it is static, it does move in real time with when price moves up or down based off of the high and the low of the day. And that's basically all it is. You're just literally taking from about 6 p.m., which is when the market opens for the next day. So if I just go back here to right here, and I'll just mark that off. And let me just make it a key level. Okay, so right here is 6. And we're just going to create this as an anchor, okay? So we know that there's a high here. And then all I'm going to do is figure out where the low is in that session for the day, okay? Now, so if I anchor, now the other thing too is, like, we're going to use Fibonacci here to do this. And I'll be as quick as I can. But with Fibonacci, all you need to do is have the 0, the 1, and the 0.5, and that's it. That's all you need to figure this out manually. Now, I know there's indicators that do this for you, but I'm showing you this in the manual way because it's always good to have that understanding and the knowing of how to do something with a blank screen, like with the blank chart. Okay, I'm a huge you know, supporter of understanding these types of basics first and then implementing indicators after. So all you're going to do is anchor the high and the low of the day. So in this case, it's pretty easy because we can see the highs up here and the lows here at the start of New York session, right? So what that does is it's going to anchor the daily range EQ, and that sits right here, okay? Now, once again, there's indicators you can use to make your life more efficient to do this, right? I know Josh just shared one. So it's up to you to figure out like what works best for you, but this is how you would do it manually, okay? So as price starts to move, you know, higher and lower from this already existing range, well, so too would the anchor, right? Your anchor would just have to manually move. Now, the big deal about this only comes in play when price starts to rebound, right? So if price were to, you know, continue going lower, which we know price, you know, dumped 600 points today. So you'll notice that, like, you can see my daily EQ indicator is just like going lower, lower, lower because it's adjusting with the price action, right? The thing is with the daily EQ is that you don't have to worry about where it is unless price is starting to trade back into it, okay? But once again, the reason I use it primarily is to figure out my daily bias. And I'll just get right back to that, and we'll go back to 9:30, and I'll explain to you what I'm doing. So if price is above the daily EQ, to me what that represents, and it's a very simple concept, I'm inside of a premium range, which means I'm only looking for shorts. And if we're below the daily EQ, well, I'm only going to be looking for longs. And I'm going to be looking at sell side liquidity levels, right? And then buy side liquidity levels at the top. Okay? So that's how you anchor and figure out where the daily EQ is. And that's how I start forming my bias. So that's the very first thing I will always do when I hop on a chart is I want to see where this is, and I want to see where price is trading at the open. Okay? Because anything can happen prior to the open, but I always want to know where it's trading at the open. Now that I know where that is, I can now start to do the next thing. So let's go back to the agenda. And the next part is you have to know how to mark up higher time frame and key levels. So these I find differ from person to person, trader to trader, based off of specific models you're trading. But for me, what's worked really well is focusing primarily on these levels, and I'll just type them out for you. Just make this a little bigger. Just bear with me for a sec. Okay, so the very first level is an H4, and this once again it could be, I'm just going to put ERL, but it's a buy side level or sell side level, right? But it's an ERL. The other level is an H1 ERL. Okay, so H4 just stands for the 4 hour. H1 stands for the hourly, basically, right? The other things I'm looking for are Asia and London highs and lows. I'm also looking at previous daily high, previous daily low. And we can also say previous weekly high, previous weekly low, but most times I don't really need to refer to that because typically what I've noticed is when I show up on a Monday and I mark out my previous daily high, it's actually the previous weekly high. So I don't really refer too much to the previous weekly high, previous weekly low. I just look for previous daily high, previous daily low. And then of course we have our daily EQ. But we're not going to really focus too much on the daily EQ besides using it as a bias, right? To figure out that bias, which we just talked about. But this is it. These are the only higher time frame key levels that I'm going to consider in my trading day. Now, the thing with these levels is I need to make sure that they are aligned to my daily bias. So if I know that my daily EQ level is here and at open price is trading below the daily EQ, so on a day like today where price dumps like 600 points at open, I still have a bullish bias no matter what. And yeah, I know there's a lot of people that made a lot of money today shorting this market, and they caught a monster of a move, no doubt. But for me, I couldn't get into anything that fit my system. Because if I did, I'm going against my own system. And that means I'm FOMOing into positions. I'm entering recklessly, right? Now, can you trade continuation IFEGs and things like that? 100%. But once again, for me, that's not what I do. I'm looking to trade external range liquidity levels. In this case, because we're below the daily EQ, I'm looking for sell side liquidity levels to execute from, okay? So I'm literally just watching price just completely crash, okay, this morning. Now, let me just put this to the side for a sec, and I'll go back to the deck. So now that we've established what the levels are, how do I go about marking these levels? And this is exactly what I do every single morning, okay? This is my process. I'll start off on the H4. Let me just put this to the side for a sec. Okay, so I'm just going to start on the H4. Just make it a little bit wider. Get this out of here. Okay, and let me just make sure I go back a bit. Okay, there we go. So about here. Okay, so I'm marking off H4 levels to start. So if I already know like I'm like price is below the daily EQ, I know I'm not looking to short, so I won't really need to worry about marking up these higher levels. So I might just mark like the most immediate ones. So I'm just going to mark this off as an H4 buy side level liquidity, right here. But I'm more concerned now with what's below price because once again, below the daily EQ. So I'm just going to start marking off these H4 levels that represent sell side liquidity. So, and I'm just going to hit copy and paste. All right, so this thing's kind of freezing on me. I apologize. So here's another one right here. Now, what constitutes an H4 sell-side liquidity level? Well, what I'm looking for are clearly defined swing points. So that means I need to see a swing high form and a swing low form. And that is what will be a sell-side liquidity level for me. So you can see there's a swing high here and there's a swing low. So this is going to be my level. Swing high and there's a swing low. That's going to be my level. Right? Is there any others? Of course, there's one right down here, right? Now I also take it one step further than that. I also mark off H4 internal sell-side liquidity levels. What is defined as a sell-side internal level? Well, it's a level that doesn't have a clearly defined swing point, number one, in terms of the high and the low. It might just have the low because I'm looking for sell-side liquidity levels. So something like this, for example, sticks out. Why does it stick out? Because this wick is lower than the candle to the left and to the right of it. So I'm going to mark that accordingly. And I have it set a little bit differently. I have it set to H4 plus N or IN. Yes, sir, hard bowler, it is recorded, 100%. So there's my internal level. And then I'm just going to start to like observe a little lower, right? So you can see there's another level right here too, right? So I'm just going to mark that off too. Now I'm going very slowly, but eventually what happens is when you do this every single day, multiple times a day, maybe you're doing it on multiple assets, this starts to become like second nature to you. Okay, and you start to see these things. Of course, you're going to miss some things too, okay? You're going to miss some things too. So there's my internal level, and then I'm going to look to the left, and I don't see any other levels on the H4, okay? So that was step one, right? I talked about H4 ERLs. Now I'm going to move to the hourly because I want to look to find where the hourly levels are. And I'm going to do the same thing, except this time I'm going to do it with H1 levels. So if I look to the left, I can see right here, there's an H1 buy-side level that's sticking out. There's another one here. Now, you're going to say, well, these are kind of clustered, right? Ashley says, do you ever use FVGs as IRLs or just swing points? So an FVG exactly is an internal range liquidity pool. I do not use them to put a trade together, but I do observe where they are. So if I can find like an internal range liquidity off of a higher time frame that aligns with a higher time frame key level that I'm using, H1, H4, then what that does is just gives me more confluence, right? So when I'm putting my journal together for the trade, I can mark that down, right? I can say H4 buy-side level liquidity, H1 plus FEG, right? So once again, like I said earlier, I don't use them because in a situation where you have a range, right? Like if I go to, here, like let me show you on the H4, right? So like right here, there's one right here, right? So this one is about 62 points. So this is kind of what I was referencing earlier, right? So 60 points. Now I'm on the 4-hour chart. If I'm trading on the 1-hour chart, this range is huge. 60 points is huge, okay? So what that means is anything can happen inside of a massive range. It's not giving me good probability. It's actually lowering my probability because I can have 4 different setups form inside there and I'm thinking they're all valid, and then what happens if they all lose, right? This is why I use ERLs, because it's a line in the sand. I can immediately see the reaction price will have off of it, and I can execute accordingly because I'm trading reversals, and I'll show you guys all of that in a second. Okay, so now that I'm on the hourly, I'll go back to this quickly. I'm just marking off those buy-side level liquidities, and then once again, I know that I'm looking for price to go lower potentially because we were below the daily range EQ. So I can see that there's another level here. So if this is my high, here's a low, here's a high, here's a lower high, I can actually mark this off as just an H1 sell side level, right? And then I'll just kind of go back through the list here and see, or through the chart just to see if I've missed anything, right? So here's another one, swing high, swing low. So here's another one. Now here, right here, you can see there's a high, there's a low, and then there's like there's a lone swing point here, right? So I know that this is a internal H1 buy side level. So for me, I have it marked H1 plus IN, right? So it's important to also like set your tools to work for you. Now this is a system that works for me. You have to figure out what works for you. You might word it differently. You might use different colors. But the thing is, it's the level that I would probably say is the takeaway here. Like, understand the level. Okay. Interesting. You're going to start looking for those, how my trades do from ERLs compared to RLs. Yeah, I mean, go for it. I mean, once again, that's the whole point of all of this, is like trial and error, practice, show up for live price action, journal, and then review. And then you start tightening things up. Carmeta says, so then the swing points marked H4, SSL, BSL are ERLs. That's correct. They're all external range liquidity. Okay. The sell side liquidity and the buy side liquidity are what determines, like, we refer to that per ICT as like in terms of like the premium and discount side of things, right? So if I have levels that are above, and like I said, I use the daily bias range EQ, or sorry, the daily range EQ to form my bias. So anything above that to me is what I'm going to refer to as buy side liquidity. And anything that's below that, I'm going to refer to as sell side liquidity, right? Do we need just to confirm the daily bias and target the liquidity from bullish or bearish order block? So I'm not using an order block. The only reason I'm using the daily range EQ is just to look at where price is in regards to that level. It's just to get on the right side of premium and discount. I think it's important as traders to create filters when we're trading. Otherwise, it's going to be like complete anarchy, right? It's going to be total chaos. You're going to be in a lower probability. And the whole point is to try to create higher probability situations or setups, right? You want to put yourself into those positions. And yeah, sometimes it's going to take a lot of patience, and you're going to have to fight a lot of emotions and nerves. But sometimes it's going to look so easy and so simple and so clear. And those are the types of trades you'll learn to believe and understand are A+, right? A+ will make you feel like that. Anything that's not like that is typically not going to be A+. And it's okay to take them, but you just have to be aware of what you're seeing. Do we just need to confirm PO3, accumulation, manipulation, distribution? So as a reversal trader, I mean, and an ICT, IFVG trader, I mean, it's all accumulation, manipulation, distribution. We're going to get into the actual nitty gritty of AMD on the lower time frame because that's where we need to really look for it, okay? Is the daily EQ the entire range or just the body range? So I'm using the wicks. So it's the high and the low of the day. Okay, so if during New York session, the low just keeps going lower, 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 then I have to keep moving that anchor lower, 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 lower too, right? Or you can use an indicator that's provided by 2Degrees, or you can use another indicator. There's stuff that's out there that you can use. I hope it's not only happening to me. Sorry, maybe I have to go back to the top and see if I missed something. Okay, so H1 levels are now intact, right? Now, the next thing I have to look at now is I got to go to the next time frame. Okay, so you see how we're going from higher time frame and we're slowly working our way lower. When I first started understanding ICT and multi-time frame analysis, I had no idea what the hell I was doing. I never understood how to properly do this. And then I started learning from Ash, and I started understanding, like, okay, I'm looking, for bias from, say, I'm using an internal range liquidity pool to an external range liquidity pool. Then I'm going to go to the hourly, and I'm going to look for the same type of thing. I'm looking for, a swing high or a swing low, or bullish FEG or a bearish FEG to align with that bias. And then on the lower time frame, it's the same thing, right? So that's how I started to understand and put it together. But the way I've kind of started doing things is I'm marking these levels, and as I keep going lower into the levels that matter to me, I can then start tightening up these levels. Okay, so what does that mean? So I'm going to go to the 50-minute now, and what you'll notice is I have a few more indicators that are going to start opening up on my chart. And one of them is this ICT kill zones and pivots indicator. So the beauty of this indicator, or any indicator, is if you just go to the settings and just go to your visibility, you can actually toggle at what time frames you want to see these indicators appear on your charts, because I don't really need to know where Asia high or London low is when I'm on the hour or the 4-hour chart, right? But I do need to know where those levels are when I start dipping into that higher time, or sorry, into that lower time frame, because I'm executing on those levels, right? So I have mine set to about the 50-minute, the 1 minute, and then of course the seconds. And the reason I'm doing this now on the 50-minute is because I still have a bit of an overview of what's happening, right? But you'll notice now the daily EQ pops up. You'll notice that I also have the TTFM indicator come up. And why is that important? Well, it's important because I need to see potentially where higher time frame SMT is located. It'd be nice to know where C2s are located, but I'm going to touch on that indicator in a sec, so I'm going to turn it off, okay? The main focus of the 50-minute, though, is I'm going to tighten up those H1 and H4 levels I just marked to correspond more accurately with where those Asia highs, Asia lows, London highs, London lows, previous daily high and previous daily low levels were, right? Which we talked about in terms of what are my higher time frame and key level levels that I look at, right? Marking up higher time frame and key levels. So that's a key level, right? So I'll just start from the top. Here's my previous daily high. I had this originally marked as an H4 buy-side liquidity level. So all I'm going to do is just tighten up that level, and I'm just going to change it to previous daily high. And I'm just going to work my way down. Okay, now, once again, you can see right now I'm going slow and steady, but as you start to do this more and more and more, this starts to become really quick, okay? This level right here is my London high, right? This level right here is my Asia low. Now, these are the kill zones. If you're not aware of what kill zones are, these are basically times where the most amount of volume is entering the market, right? So we know that there's different sessions, but like what hours are most important for each session? So for London session, we know it's 2 to 5 a.m. Eastern time, right? For Asia session, even though the market opens at 6, the actual kill zone that I'm referring to is running from about 8 p.m. to midnight. So my levels are going to mark off accordingly to that, okay? So here's my Asia low, and then I'm going to go a little bit lower, and I can see now here that I have a previous daily low right here too, okay? So let me mark that off, previous daily low. And I can go a little lower just to double check what I'm seeing, and there's nothing else there. So now I've gone from the 4 hour to the 1 hour to the 50-minute, and I've tightened everything up. And the next thing I'm going to do now is set alerts. This is incredibly important as a trader. Okay, you have to set alerts for yourself. And the way you would do that is you can create these alerts just off the line itself. Okay, you can hit right click and then So like if I want to, so like for me today, I set alerts for these three, and all I did, and I also set alerts for everything below. But what you're gonna do is just click on your level, your toolbar opens up, and right here you see the add alert. You're just gonna hit alert, and I know it's replay mode, so it's not gonna work. So let me just do this. Just so we can, so I'm just gonna hit add alert, and then you're gonna get this dialog box pop up, and all I'm gonna do is make sure that it's just gonna trigger once, and it's just gonna be set to crossing, because I don't really care how it crosses it, I just wanna make sure it crosses it, and I only need to be alerted once. Okay, so then I'll hit create. Now, what ends up happening when these alerts start firing off is you start getting stuff like this, right? See if I can find, because I had already deleted the line, the actual alert has also deleted. But if you see how I have this on BTC, for example, this is triggered today at 11 a.m. H4 SSL. So it's no different than one of these levels, right? Except it would just say, you know, in this case, if it was a Asia low, it would just say, you know, 1 minute Asia low, or sorry, 1 minute Asia low, and then it would show me the asset NQ1, right? So that alert will pop up, and the reason those are important is because then you know a very key level for you has fired off, right? Because you might be like doing something on your left screen, or you might be doing something on your phone, or maybe you're in the washroom, or maybe you're just quickly doing an errand, or maybe you're just reading just to wait for something to happen, right? But it's important to have these things, okay? So for me, I'll set those alerts, and then I'm literally just going to wait on the 1 minute time frame, okay? And then what you do is you just wait for price to hit those levels, okay? So once you start getting alerts made, you already know your bias. So I'll just go back to the beginning again. I'll just walk you through how today went, and I'll show you the 2 trades that I took and how I executed. One of them I got greedy. The other one I executed properly. I should have probably held longer, but I hit my daily range for the day, like my target, and I was like, given the way this day's been, I'm happy with it, but I should have stuck to my actual TP system. We'll talk about that in a sec. And like I said, the whole battle of this whole thing is always going to be yourself, okay? And this is where you really have to start trusting in your system and believing in it if you have the data to prove it and back it up, because otherwise you start to give back gains that you should have had because you did everything right. And I'm going to show you guys that in a sec. So at open, we have price opening and then just ripping lower. Now I'm below the daily EQ, and my first point of interest was Asia low. Okay, so I'm waiting for Asia low to get tagged. Now, before I go into the next thing, okay, and this is the lower time frame analysis component, I just want to bring light to one other thing in this process, because I did say how even though I'm trading only NQ, because I'm only trading NQ, it is super important that I keep an eye on ES. So I have another layout that I have set up on my screen. It's just on the next window, and you can title it whatever you want when you do it, but for me, I have it just set to split. I have NQ on the left and I have ES on the right. Now, why is this important to have? Well, the reason it's important to have is because, and I'm just going to go back if I can here. Let me see if I can hit rewind, if it will let me. Let's go back to here. Oh, it's not going to let me do it with split screen. Okay, let me get rid of that. So, okay, so here's the thing. So when the market opened here, okay, I'll show it to you this way. When the market opened here, remember how we said the daily EQ was above NQ? So at the open of the session, ES was actually above the daily EQ. Okay, so it's important to start finding discrepancies between the two, right? So we often use ES and NQ to find discrepancies in terms of divergence, right? SMT divergence. One of them makes a higher high, the other one makes a lower high, right? Things like that. And then that tells us, hey, one of those assets is the weaker asset, and it would support the potential for a short, right, in that situation. Or it shows us like a crack in correlation for the price to reverse and maybe go lower. But I also like to find discrepancies in terms of the levels, because it gives me some more context. And this takes practice. This didn't come for me overnight. I'm not going to say this is easy, because it's a whole other layer of analysis you have to do. But I promise you it's insanely important. Okay, so the reason it's important is because sometimes if I know like price is sweeping London low here, or sorry, Asia low, right here, I can immediately tell. Let me just go to the 1 minute for a sec. Right here. Okay, so as I had shared in that other chart that NQ had swept or had started to sweep Asia low. Okay, now follow me if you can. If you get lost, just post something in the chat and I'll slow down or I'll go back. Okay, so I had mentioned NQ is about to approach Asia low and it tags it. I get the alert. I go on. I'm looking at my screen, of course. But if I look to the right about here, let me just hit play. So right about here is 934, right? So let's go to 934, which is right here. Okay. The daily EQ can also act as like a support and resistance line. But the thing is, it still has to hold support in this case, because if I want to catch a long here on the lower time frame, sure, I need to find my execution trigger, which we'll talk about, but I also need to make sure ES isn't like blowing through what I look to be as support, right? Now, I'll also mark up H4 levels and all that stuff with ES. I'm not going to do it right now, but I would also do the same thing, because it's important to know where those levels are, because it tells us if like, it just gives us more information if NQ is actually going to shit the bed or not, right? So in this situation, I'm just going to hit play. We can see to the left, NQ literally just decimated the Asia low. And by seeing that happen, that can tell me right away that this support level is also not going to hold, okay? So as price continues to move lower, this is how I use ES. I use ES to understand how much more room price could go, because they are moving together for the most part, right? There are cracks in correlation. When you start seeing NQ and ES doing two different things, like one's going way higher, one's going way lower, that's a reason to pause. Let the market start to align a little more, and then look for the cracks in correlation, right? Like right here, you can see where the reversal happened. ES makes a lower low, and NQ makes a higher low. So right there is a crack in correlation. Now, let's go back to NQ for a sec on the main chart. So as these levels are marked on my chart, and yeah, I have ES on the other screen, I can then start to see how price is moving, right? Let me just slow this down to 5. So I have alerts just firing off. Asia low gets tagged, alert goes off. Previous daily low gets alerted. Price just blows through that. So as price starts to blow through these levels, I can start to obviously ignore them because they're not being respected, right? That's part of this game. Is the higher time frame is telling me where the levels are. We have to use the lower time frame to understand where the execution trigger is, right? And this is where I start to now toggle between the 1 minute, the 2 minute, and the 3 minute. Because for me, I'm looking for the cleanest type of IFVG on the lower time frame. Now, for me, my sweet spot is the 1 minute and the 2 minute. I will take 3 minute time frame trades, but that's as high as I want to go. I know 5 minute trades set up, but my stats don't give me results for 5 minute charts. My stats give me good results for 1 to 3 minute time frame setups, and I'm going to show you what I'm talking about. So as price is ripping lower, okay, you can see price is just moving further and further down. Now, here's the IFVG Pro Plus indicator. I just want to point this out. The beauty of this indicator is, and this is why I like it so much, is I've configured the settings to work for the way I trade. And I would highly recommend for you to figure out your own criteria. If it's similar to mine, that's perfect. If it's not, that's also perfect. Just make sure you figure out what's important to you. But the beauty with this indicator is I've set the settings to align, once again, more closely to how I like to trade. So if we just go through the settings quickly, for me, I only want to see about 5 setups, and I don't care if they're losers, like if they technically look like they're fails. I just want to see everything. My bias is set to neutral because I want to see, longs and shorts. Now, in terms of IFVG type, okay, so there's something known as a series, and there's something known as like a singular type of setup. Now, what does a series mean? A series means when you have overlapping FVGs that form like back to back. So you'll notice right here, there's 2 FVGs that are forming back to back. So, and that had swept Asia low. So if a setup had formed around here, it's a safer approach to create a series of FVGs so that when we see like strong momentum rip through the other side to form that IFVG, we're entering with a more safe approach versus a singular approach. Now, this is just preference. Some people like to still use the singular. I prefer the series, but sometimes you got to make split decisions in real time and based off the momentum that you see. Now, another thing I like about this indicator is I also have this set to swing, so that just means like if a setup forms, it will only deem it like a failure if like the actual swing point of the setup gets closed below, or in this case below or above. You can also set it to close. Close just means if it closes on the other side of where the IFVG is being located. So the indicator will actually show you this coloring here, this shading. It will pump out an alert if you have the alert set. You'll notice up here I have all the criteria checked off for alerts. I just want to know about everything. And then the other key thing too is the liquidity time frame. So I didn't know about this. Maybe this wasn't even available back in 2025. Maybe Josh, you can confirm. I'm not sure if you can, but I don't know if this was there. It was there? Okay, so automatic basically means if I'm on the 1 minute time frame, it's going to be referencing the 5 minute liquidity levels. Okay, I'm not using 5 minute liquidity levels. I'm using H4 levels and H1 levels. Now, the beauty with this is H1 levels can also be H4 levels. So all I do is I just set this to custom and I set it to 1 hour. And anytime there is a setup potentially forming now off of an H1 level, right? And an H1 level is like those levels I just showed you, how I put them on the chart. Anything with the swing point. I just have them more defined because I want to know specifically if it's an internal liquidity level or if it's actually like a major, swing point. So the indicator will then print out this SSL here. Now let me just go back so you can see what I'm talking about. Okay, so you see that popped up? So that's the indicator. And the reason it's coming up is because it's observing FVGs as price is sweeping a key H1 sell side liquidity level, right? Which I know is Asia low because I have marked it. It's important to know the distinction with these levels, okay? Now, there's obviously invalidation to this setup, and that comes when criteria starts to, obviously become invalidated. And what that means is that price doesn't come the other way. It just keeps going lower, right? So we're just going to keep going. And now it made that disappear. It's now showing me the next sell side level. Guess what? I already know what that level is. It's the previous daily low. Okay? So it's a super cool indicator, very intuitive. I think it's amazing because of the system I'm trading. It just complements it so well. But once again, we're still looking for an IFVG, okay? So price just keeps going lower, invalidated. Now we're at another level. And as we know today, NQ ripped almost 660 points to the downside, okay? So none of these are gonna be working, okay? Now I wanna show this to you because I think this is important. So you can start to see that there's a recovery happening. And this is going to come to the next point, which is understanding how to differentiate between lower time frame charts, right? And this is associated with lower time frame analysis, and we'll kind of get into A and B, A plus B plus type setups in a sec. So as price is now starting to move off this level, I'm on the 1 minute time frame. But what I want to see is I'm not going to trade this IFVG up here. That's way too high. I'm looking for IFVGs to be formed as close to the sell side liquidity level as possible. So this is where I'll start moving to like the 2 minute, right? Here's the 2 minute. I might move to the 3 minute, but I'll only move to these higher time frames, like a 3 minute or 2 minute, if the price action isn't showing me what I want to see on the 1 minute. So on the 1 minute, there's nothing here for me to work with. I'm going to now use the 2 minute. Does the 2 minute show me something? Now, the 2 minute on this section is showing me something that's fitting more of what that lower time frame criteria would look like. And this brings me to the next thing, which is the size of the FVG itself, okay? So we'll get into the session filter in a sec. It's pretty obvious. But if I get to the model filter, which is the IFVG threshold, right? You'll see that there's a setting for all. So it's going to show me any sort of sized IFVG that forms. They also have custom sets, medium, small and large, medium and large only. For me, I've chosen to use custom, okay? Because there's a specific thing I'm looking for. And when it comes to NQ, I don't want to see IFVGs that are only 1 point in size or 2 points in size or less than 5 points in size. I want to see IFVGs that have 5 points, that are 5 points or larger. Typically, 5 to about 15 points is like the ideal size, okay? And size matters because when price starts to blow through larger size IFVGs and confirm them, it's really showing you that momentum is going the other way, okay? And then you can use that size of the FVG itself, which is now the IFVG, to place your stop loss on the other side of it. If you have an IFVG that's only 5 points, like you're not gonna have a 5 point stop loss. And the thing is, price can easily rip 5 points the other way. So this is where size matters, right? That's kind of funny to say that, but so I have it set to 5 points, and then in terms of like opposing swing filter, I have it set to momentum. It just basically means like price hasn't swept like the opposing side. It can just be part of continuation moves. It could be more standalone. There's like less of a filtered criteria to impact the setup. So if I click this to no opposing sweep, I don't know if this will disappear or not. Okay, so it stays on because there technically is no opposing sweep forming a different type of setup on the other direction. That's probably what it means. So, but for me, I like to keep it at momentum. Yeah, go for it, man. Thanks for that. You'll notice I have V-shape reversal off. V-shape reversal is basically something like what you're seeing here, right? I have this set off because it's an additional filter. I just want to see everything because sometimes, truth be told, some IFVGs are not going to look pretty, okay? And some of them are going to look really pretty. And then beyond that, a lot of it is just more of the aesthetic stuff, okay? But the whole point of what I was trying to get to here was the liquidity time frame. Obviously, there's a session thing here. I only want to see IFVGs that form in between this time frame. I can click this off and then it will show everything, or I can only show them from London session. I only do this just to control my FOMO, because sometimes if I have this set off and everything's showing and then I start seeing IFVGs form in the afternoon, it's just something I've had where I've been like, oh man, I feel like that's such a good setup. I should get in the trade. The next thing you know, I'm in an afternoon trade when I shouldn't be, and I take a loss. So I don't want to have that happen to me. This is a filter to keep me safe and to just like remove that sort of, what's the word I'm looking for? Temptation. I think that's a good word to use, temptation. Okay, so now that we understand the size of the FVG, the next thing to understand is like the way the formation of this FVG forms. We talk about drawn liquidity a lot, right? If you look at some of the best traders that we know of that are influencers on social media, one of the major things they talk about is the drawn liquidity, right? Price has to have something to reach for. The last thing you want to do is get into a trade where the drawn liquidity is literally right above where your entry is. So if I'm looking at this setup right now, I'm on the 2 minute because the 1 minute wasn't clean. Look at all the FVGs here. That's liquidity. Price could literally reverse at any one of these, right? Now, if these weren't FVGs, then my drawn liquidity is just the next swing point in that range. That's a clear drawn liquidity. That's a jagged edge, if you will, right? I want to see more of that. I don't want to see FVGs forming in here, okay? So it's important to kind of understand that part when you're seeing this, because in real time, you miss these things. And you miss these details, and it's super important to know when that's there and when that will lower your probability. Now, can it, of course, go the other way? Of course it can. Price can do whatever it wants, whenever it wants. Our goal is to just create high probability situations that we're going to work off of, okay? So as price is now doing something like this, we have to wait for confirmation. We know that there's a potential that an FVG is going to be flipped into an IFVG, but until it happens, it's not confirmed, okay? So if you prematurely enter thinking, oh, this is like running, and then guess what? It doesn't confirm, it's going to reverse on you, and then you're at stop loss. So it's important to wait for confirmation. There's a time to chase, and then there's a time to not chase. And in this situation, given the way the day was playing out, you don't want to chase. And once again, these FVGs were enough to just tell me it's not worth it. So you keep letting price do its thing. And then we get another dump, right? So now we're just like ripping through every level of interest. And you know, when something like this happens, this is not organic. This is definitely news driven. I think it had something to do with Microsoft. I think it had something to do with earnings. I don't think Trump was speaking. I think he was scheduled to speak later today at 4:30 p.m. Eastern. But this is not healthy and this is not normal. So automatically, this is telling me like it's either a bearish trend day, which that's what it looked like, or there's some serious manipulation happening, and at some point when the manipulation is over, there could be a setup. Okay. Vital signs. This is being recorded, and it will be it'll be posted on my YouTube, and also Toodegrees will be able to share the link in the applicable live stream section. So don't fret. You'll have access to it. And if you have problems finding it, you can just send me a DM, man. It's all good. Okay, so now price is starting to move even lower. So when this starts to happen, I'm going to start moving up time frames now back to my higher time frame, because I need to start seeing a bigger picture of what's happening, right? Hey, no problem, bud. So when I start moving to the 4-hour and the hourly, this is where things like FVGs start coming into play, okay? Because we know on the higher time frame, FVGs can be respected. Am I trading off of it? Technically, no. But this is what I said. I like to use them as reference. I like to use them as a positional tool, because if price is doing what it's doing like it's doing today, I need to get all the help I can get, right? Or I just need to stay out of the market. So I'm just going to mark this off because I can see that there was an H4 bullish FEG right here, and I'm just going to mark that off accordingly. Bullish FEG right here, okay? Now, if I go back to the 1 minute, the reason I'm putting it on my screen, let me just go back a sec here. Okay. Okay, so this is the first trade I took today, and I'll explain to you why. Now, once again, it's important to understand what the indicator will do, because it is a program. It's looking for specific mechanical criteria, and then there's the other side, which is like trading intuition, okay? Understanding what you're exactly looking for, because you can still capitalize on IFEG trades, even though the IFEG Pro Plus indicator is telling you or not showing you something, right? Because it's not an immediate reaction. Now, this is a very good example of this. So as price blew through this H1 sell-side liquidity level, I knew there was an H4 FVG here. So I'm referring to this level as my higher time frame ERL. And as price starts to get into this level, I'm looking to see what price is going to do. Is it like, ideally for me, A plus is when we have something like a V-shape move, right? But sometimes you're going to get moves where we get more of like that liquidity sweep, maybe potential unicorn-like behavior, right? Which we see with breaker blocks and things like that. But if we look to the chart here, we get more of this, less of this, right? There's our Quasimodo, that's that liquidity sweep, right? I'll just mark this off accordingly, right? There's our liquidity sweep. Technically, if this were to have broken higher, then we would have been looking at something like this would have definitely been a unicorn. So it's important to understand these concepts, right? Like I took time to learn the unicorn, but you need to know what you're seeing, because sometimes you're going to see clean IFEG V-shaped recoveries. Sometimes you're going to see swing failure patterns where there's no liquidity sweep. A swing failure pattern is when price just literally goes down, sweeps into the level, right? Spikes, and then creates a higher low, and then pushes higher, right? So that's a swing failure pattern because it failed to sweep the swing. The more traditional ICT concepts that most people look for are those liquidity sweeps on the lower time frame. What I'm looking for is not anything specifically with any of these, obviously this is the ideal setup, but I'm looking to see a properly sized FVG that can get flipped into an IFVG. So as price is now doing this, the sweep itself actually just gives me a little more encouragement or confidence that maybe this is where price is going to start to reverse from. Maybe. I don't know if it will, but maybe it will. This is where the TTFM indicator can come into play. I'll talk about this for a sec. So I use the TTFM indicator not so much for the continuation aspect like probably everybody does. The main reason I'm using it is I'm looking to find some confluence to the swing point itself. So I have C2 activated on my chart. You'll notice I'm hiding the higher time frame candles, but if I unhide them, they're going to appear here. Now, why is it important to reference these candlesticks? Well, sometimes we can see that if there is like a C2 starting to form, then it's just going to give me, once again, more confluence that maybe this is where price is reversing. Maybe. But even if it doesn't, you can still take an IFVG setup. I've taken countless numbers of IFVG setups that don't have C2s, okay? So it's okay that there's no C2, but when a day like today is happening, it's important to kind of see what's happening with that higher time frame, because you know what's happening is not normal. And if you're trying to pick off a reversal trade, right? You're trying to catch a knife. You need to use any sort of protective equipment that you can, right? So you don't get cut. So I was watching this, not really seeing anything, right? That's okay. That's fine with me. Another thing I was looking for was SMT, right? So if I reference that area right here, you'll notice the same level, there was no SMT. So there's two things this is telling me. The first thing is telling me that this might not be the higher time frame level I'm looking for to catch that reversal, okay? However, if something does form though, because I mechanically trade, no motion, I'm gonna take the setup because I don't need to hit a home run. I am looking for a base hit, okay? What is a base hit? A base hit is like 20 points, okay? And this is gonna go to the next part of the conversation, right? Which is risk management, as well as the TP and the stop loss system. No problem, Oz. Take care, man. Just take a sip of water. So what ends up happening here is, like I said, a beautiful sweep. And the next thing I want to see is momentum. Okay, now I have a checklist that I have for myself. I think it's highly important for everybody to have a checklist with them, whether you write it down on a piece of paper and you keep it at your desk, whether you have an indicator like me where it just shows you something that you can flash on and off. Maybe it's on your phone, however that looks like. Maybe it's printed on your and stuck to your wall, something like that. Like I still have, I'm looking at it right now. I have my old unicorn model checklist that Ashtrade's made from way back in the day before there was even a Unicorn University. Still have that taped on my wall. I kind of have it as like a reference to my starting point. It's a good reminder, good way to stay humble. I think in this industry you have to stay humble. You have to be grateful for what's there. Yeah, Rob, the IFVG indicator does has SMT detection. That's actually the next thing I'm going to talk about after this setup. I'm going to show you. So with this setup, once again, for me, my checklist is like, are we in the kill zone? I already know I'm in the kill zone, so that's good. Is it a major liquidity sweep? Yes, it is, right? On both accords. We have the SSL here and we have an H4 FVG. Are we on the right side of premium and discount? Yep, we sure are. Now, the next three things are very, very important. Is there an instant reaction coming from this level? Okay, that's like, do I have something like this happening? Do I have something like this happening? Right? Consolidation inside of the area? Or do I have something more like this where it's like the traditional, once again, the concepts of liquidity sweeps, right? Am I getting something like this? So instant reaction would be the least amount of candles forming an IFVG. this is A plus. When you see something like this, right? This is A plus. When I see something like this, that's not A plus. And when I see something like this, it starts moving into the B plus territory. Okay, and it doesn't mean it can't work. It's just like you got to be a little bit more careful. Now, this is the setup that happened. Okay, we get the beautiful sweep, and you can see how strong the reaction and the momentum is after it sweeps, right? Moves straight up. Now, you'll notice the indicator doesn't have anything on because this is the leg where it's going to be capturing that IFVG. But this is where that intuition has to come in play, because if I look right here, there's a clear FVG right here that's being flipped into an IFVG. So I was watching this, and I knew the probability wasn't very high. But once again, I'm not looking for home runs. I'm looking for base hits. And that's the difference between someone who's exclusively looking for 2R or like it's like ride or die, plus 2R or minus 1R. I mean, you're literally looking for a home run, right? Every trade can't be a home run, even though the stats might prove that 2Rs are working. Like I said, it just doesn't fit my personality because I don't want to be stuck in a trade for an hour. I want to be in and out of trades as quick as possible, right? So when I'm looking at this, is there an instant reaction? Well, there wasn't one here, but there was here. And then is there strong momentum? Strong momentum just basically means, like, do we have a strong push confirming the IFEG? So as this is happening, I'm on the 1 minute time frame. I'm going to say this very, very clearly. The only time I'm going to ever chase is on the 1 minute. And when I say chase, I'm basically talking about like entering the position before the candle closes. And there's a reason I do this. Only on the 1 minute. I will not do this on the 2 minute or the 3 minute. I've learned my lesson. I've been burnt one too many times. I've learned that on the 2 minute and 3 minute, wait for the confirmation to close. But if it's on the 1 minute, I will chase. Now here's the setup. As price starts to close above this level, when there's like 20 to 10 seconds left in the closure of that candle, what I've noticed is you sometimes get those last second spikes, those pushes. And what that does, if you're waiting for confirmation, is it actually pushes your entry away from like a more optimal entry, which is like closer to the IFVG. Okay, so what happens is as this was starting to push higher, there was like 10 to 20 seconds left. I end up just market ordering in. And that's the other thing. I don't set limit entry orders. I market order in. So my entry was, I think it was somewhere around, I'm just looking at my chart, somewhere around here. Okay, it's like around here. And then at the last second, price ends up pushing higher. Okay, so I only do this with the 1 minute. I don't recommend people to do this unless they practice. Sometimes it's better to just wait. But once again, when you wait, you put yourself in a less optimal position to take profit. And the reason I do this is because the next thing is like my stop loss. Like I want my stop loss to be, you know, I don't want to use the swing point, even though I can. It can be like a hard stop loss. But ideally, I'm trying to have a stop loss that's not too big. And in this situation, I already know with the swings of the price action, like this is a 22 point sized FEG. That's huge, right? It's fine. I'm still going to take it, but I have to be aware then, or be mindful that my stop loss is now going to be potentially, you know, 40 points, right? So here's the Quasimodo. Maybe I set it a little lower, something like this, right? Now you'll notice that this is 2R. So if I'm trying to examine like, okay, well, is there a clear drawn liquidity? Well, I know all this is liquidity, okay? But this is where the base hit concept comes in. Because I only need to see 20 points get tagged, right? Once I see 20 points, I have TP1. Now, I got greedy today. I'm not gonna lie. I thought, and it was only because of the size of what was happening. But typically what I'll do is around 0.5 RR. That's usually where TP1 comes in for me. And the second TP1 hits, my stop loss goes to break even. So technically, I should have had TP1 here. I probably usually close like, I don't know, 30 to 50% of my trade, and then I'll leave the runners to go higher. And those are the ones where you start to wait a little bit more for key levels. And then you'll start noticing the P&L go up. And for me, that's all I care about. I only, so, okay, Soul Search, here's the reason. I've spent way too much time looking for 2R trades that end up losers, and it's like I can see like $1,000 sitting there, but I'm like, I'm only at 1.25R. I have to wait to 2R, but I'm at $1,000. I have got to a point where it's like I can't be okay with seeing $1,000 sit on the table there and I'm not touching it. I'm not taking it, right? I got the trade right. I was patient enough to draw out my levels. Price is responding exactly like I was hoping it would. Now I'm going to get greedy and look for 2R. Sometimes trades will go 2R, but this is why I hold runners. And I don't worry about the R factor anymore. I'm actually looking at the dollar. So in my account, if my goal is to get a withdrawal from a prop firm, like honestly, who the fuck cares about 2R? Like, why do you care about 2R? And I know it might not be the popular opinion to say this. I know I'm going against a lot of things by saying this, but I'm just saying it because I got pissed off. And I say this with a lot of emotion because I do not want to see $1,000 or whatever the dollar value is on the table, and I have not even like skimmed any profit, and then it goes to break even or stop loss. Like that is the worst thing. So I take a base hit. I'm looking at my bank account, or I say my bank account, I'm looking at my prop firm account, my Trade-Evate, whatever, and I have personally set like a daily goal financially. That's what I'm looking at. So everybody's goal is going to be different. Everyone's got different perspectives, different agendas. Some of us have only one account. Some of us might have 30 accounts. Like, it doesn't matter, all of that stuff, right? That stuff doesn't matter. It's irrelevant. The thing is that if you're trying to get to withdrawal, right, and you want to get like a payout, well, you need money, like plus money to get a payout. Last thing you want is to not get that, see that money, and any little bit is going to help you. So for me, I have it set so that I'm looking for, you know, a specific dollar amount per day, and if I can get that dollar amount, then technically that I've ended the day green and I hit my goal. And that happened for me today. I hit my goal, and I should have held on to the trade longer. And it's not this trade, there's another trade, but I'll tell you where my mistake was. So, but this is why I hold runners. I'm going to show you another reason why on that second trade, and I should have stuck to my system. But like I said, because of this trade, I got in my head and seeing what was happening, I just thought, you know what, I hit my daily goal. I'm just going to call it. And I know I have a live stream later, so it's all good. But with this trade, my actual first TP I had set right here. Okay, now it's a little stupid, and this is going to happen. So I have a TP set here. Now this TP is not set with a limit sell order. I never use limit sell. I'm always using the buy and the sell buttons on the top, and I'm adjusting my contracts accordingly, right? So let's just say, I'll just throw out a number. Let's say I had 4 contracts open, okay? If I'm right here, I'm probably gonna close at least 1, right? So hit sell. So now that takes off 1 of the 4 contracts. I'm now down left to 3. Sorry, if it hit here, it would have been down to 3, and I'm just gonna hit sell. I don't even wait sometimes for it to get right to it, like crossing it. If I'm fast enough, I'll just take it even a little early, because once again, I don't want to give money back to the market, because the market is gonna like do anything in its power to like screw me over, right? And I'm not saying this to be scared. I'm just saying this is like, I gotta have a good defense in order to have a good offense, right? Anyone who plays sports understands what I'm talking about. But we also have greed that we have to like worry about. So because of the size of the way the IFEG was, the size of my stop loss, I was thinking, even though this is 0.5 right here, 22 points, I was literally aiming for this, 32.75 points. I thought, let me take my first skim here. So price went up. I'm now in the 20-point range. I don't take TP. Price starts doing this. I'm like, okay, it's fine. Let's just see what happens. Then we get that massive push up here. And on this push, I almost clicked the sell button, and I got greedy and I didn't. Okay? And then when price started to like reverse on me in that same candle, I ended up just like moving my stop loss to break even, because I knew that I should have skimmed here and I didn't. and if I had skimmed my profit in the 20 to 30 point range, even 30 point range would have been ideal, then I would have immediately been stopped out at break even with the remaining amount of contracts I had open anyways. So I ended up closing this trade at break even, and I missed out taking that base hit. But this is an example of how I would set this whole trade up and what I would be looking for exactly, what I would deem momentum as. In terms of like the drawn liquidity, well, once again, all this right here was my drawn liquidity, right? If price had just gone higher, like hit here and then continued to go higher, right? Like even here, like that's 1.46, that's 64 points, right? Typically what I'm doing when I'm trading optimally is like every 0.5 is like a TP. So like 0.5 here, here's one, there's another TP, here's another TP, here's another TP, something like that, right? But sometimes when price is just ripping, you don't have time to keep skimming profits because you got to watch how price is moving, right? So like an example would be on a cascade like this, if it was going in the direction I wanted it to, like I wouldn't be skimming profits so quickly, right? I would be watching how price is moving because you want to stay in that trend for as long as you can, but this only comes with practice, okay? So that's how I set up that first trade. This is not an A+ setup. I want that to be known. This is not an A+ setup. I would say this is like a B+ setup for me. But nonetheless, a B+ setup should have provided me with a base hit. Okay, so I would have had one trade there. It would have been a winner. Okay, the dollar amount for me is different than the dollar amount for you. The point is, it's like trying to just get into the idea of skimming profits and managing your trade accordingly. Okay, so this gets us to the next part now, which is the next trade. This trade, I believe, was more A+. So let's get rid of the FVG for a sec. And we'll just hit play. Okay, so the lines are there. Does anyone have any questions, by the way? I don't think I missed anything. I appreciate it. Once again, I appreciate everyone being here. So now prices hit an H1 internal sell side liquidity level. Okay. So same thing. What am I looking for? Right? What am I looking for? Well, let's put the checklist back up. We already know we're in the kill zone. It's only 1043. We know price has dumped 600 plus points. So like at some point, something has to reverse, right? Nothing goes down forever. And we know with NQ, there's always that like mid-morning reversal. It's like, so you just stay patient and you wait. And if you get something, you get something. If you don't get something, you don't get something. That's just how it goes, right? So I'm waiting to see what's going to happen next. I know I screwed this up. I'm not going to lie. This is in my head. Okay, I'm a human being just like everybody else. I'm a trader just like everybody else. When you make a mistake, it stays in the back of your head. Okay, we all do this. So I'm watching. Okay, so now I'm getting this. Now we're on the 1 minute time frame. We're going to go back to the agenda, right? Understanding how to differentiate between lower time frame charts, 1 minute to 3 minute. Once again, if I'm not seeing anything clear here, clear meaning like this type of structure, the V, right? If I'm not seeing something like that on this time frame, and I don't even see any sort of FVGs that could work for me to become my FVGs, I'm going to move up a time frame. Okay, so now that I'm moving up a time frame, you'll notice that the price starts to tighten up. Things start to look cleaner. So as I'm looking at this now, you can see now the indicator's showing me, hey, there's a sell side liquidity level here. There's an alert. Now, having alerts on, what time is it right now? 10:30 to 11 in here. Let's see. Okay, so you'll see right here, 10:56. Potential bullish IFEG 2 minute. So I have alerts set on the 1 minute time frame and the 2 minute time frame. I don't have it set on the 3 minute because I'm pretty active that I'll see it. But I want to know for sure if there's a 1 minute or 2 minute setup, because sometimes I'm too busy looking at the 1 minute and then I forget about the 2 minute, because I'm so caught up in whatever I'm looking at that then I get an alert and I look at it and it's like, oh shit, there's a 2-minute setup potential. So then I'll move to the 2-minute and go, oh, okay. Good thing that alert went off. Super handy with the indicator, okay? But guess what? Invalidated, right? Now keep in mind, this says 10:57, right? So it's still coming up. So now SSL 1 hour, indicators firing off telling me, hey, like wake up, there's a potential setup happening, right? Now there sometimes, you know, you got to understand things with like relying on indicators as amazing as like this indicator is. This is why you still have to set alerts for yourself, because sometimes like what if for whatever reason the indicator does not fire an alert, right? Are you going to blame the indicator? No, you're going to have to blame yourself. This is why I mark those levels. I've set alerts on those levels, and when the alerts hit, I'm immediately watching it. And as I'm watching it, I already know that the indicator is going to be firing off an alert because I can see the setup forming before it even happens. And that's the point where you need to get to. You need to be able to see the setup happening before it even happens and before an indicator tells you it's happening, okay? It's good to learn with it, of course, to help you identify where it is when you're learning. But eventually you're going to get to a point, hopefully, where you don't like wait for the indicator to tell you something. The reason I really like the indicator is because sometimes it catches things I miss, right? It also makes my life more efficient. It also makes my charts look really nice, which I like to. It helps me like identify things. So if I share a chart, everyone knows what I'm looking at. I don't have to manually mark it. That's the efficiency side, right? So anyways, price starts to do this. This is that V shape, right? We're getting a nice move. The thing that I started to question with this setup though was the distance of where the FVG was located and also the size. So even though you know, it's sized well. Now you'll see one thing. This is 23.5 points, but it's calculating the series. And you can see this right here, 40 points. This I didn't like. I didn't like the 40-point aspect, so I then moved up a time frame. And I moved to the 3-minute. And the reason I moved to the 3-minute is because now I have a singular setup. 28 points, not 41 points. I like that, and the reason I like it is because my stop loss now can be positioned accordingly, right? I can actually use this swing point now as a stop loss. So as I'm watching this now on the 3-minute chart, what I'm going to start to do is get ready. And this is how I get ready, okay? Now keep in mind, it's a 3-minute chart, so I have to wait for, I'm waiting for confirmation. But immediately what I can do is start to understand like where my levels are going to be. Now you'll see my stop loss is set at 74 points, right? That's really not good. That's pretty big. I think I had it set smaller. Let me just double check my chart for a sec to make sure I remember what I did. Sorry, give me one sec. Okay, looks like I did use that. I think I just accepted my risk because given how volatile the market was, I just gave myself more room. My goal in this trade was literally just to get up here. That was it. That was the only goal I had for this trade. Let's watch what happens. So New York kill zone, major liquidity sweep. On the right side of premium and discount, you can see the daily cues right here. We have instant reaction coming from that level and strong momentum, potentially confirming the FVG. Let's just see what happens. So it plays around, plays around. Now, we talked about how we want to ideally see this, right? But sometimes we don't get that, and we'll get something like what we see right now, which is like we get a little bit of consolidation, right? Now, when we start to see this kind of consolidation, what's important is understanding the type of strength that we see if the IFVG gets confirmed. We want strong momentum. When I saw this, and remember, I'm waiting for the 3-minute candle to close. This told me all I needed to know, that this is a good trade. And so even though there's consolidation, the momentum told me a lot. This bullish engulfing candlestick, which I'm not sure if anyone here understands what that is, but that's like, you know, retail 101, understanding candlestick patterns. Bearish engulfing candlestick is one of the most important. When you see something like that, that's showing you strength. And you're not even seeing much of a wick happen at the top, which is telling you there's not even much selling pressure. Small wick at the bottom. That, like, even if it was a little longer, that's fine. The thing is, there's practically nothing at the top. So this is telling you this is a very, very good setup, and it's confirming the IFEG, right? So if we get that strong momentum move, I'm in. So literally, I'm in the position, and here I am. Now, here's the thing. Remember we talked about taking points, 20 points, right? Doing stuff like that. So what I'll do in this situation is I'm looking at how many points my stop loss is, and I have a little sizing guide. I'm gonna share this with everybody in the chat, okay? Because you're here. You can copy this thing. I think you can make a duplicate of it, but it's like a cheat sheet that I have. So usually, you know, my goal is to set stop losses around these point sizes. Now you'll see I have the varying dollar amount, but what you can do is use it as a cheat sheet so that you don't have to like really worry too much about trying to calculate the position itself. So obviously today is an anomaly, but in other days where I'm trading like, you know, with a 20-point stop loss, like I know if I use 10 contracts, it's going to average around $400, right? And then so on and so forth, depending on whatever I decide to risk. So I'm going to share this in the chat in a sec. I'll go back to NQ for a sec. So I'm in this trade, and I've figured out my sizing. Even before this confirms, I already know what my sizing is. So I'm literally going to be entering with a market. I have the amount set here, which the contracts I want, and I'm literally just going to hit buy. Okay, a market order entry in position. And the other thing is, like, I've got to calculate my TPs. So like right here would have been like, you know, and I have it set about here. So like, it doesn't have to be perfect. It's just like an average level, right? So like I'll put TP1 there as like a visual reference, right? And then I know like this would be TP2, like somewhere around here, right? And then so on and so forth. TP3 maybe, something like up here. And then of course I have the drawn liquidity that is formed off of the indicator also gives us some targets to reach too. So, and like I said, I wanted to target the top of the range. That is what I wanted to do, okay? So I went full size on this thing. And the other thing I want to talk about with this, which I also did, was I saw this great setup, but then well, remember, I'm looking to see if there's any sort of SMT with the setup, right? Now you'll notice on ES, it's showing me, and I can obviously clearly see that there's SMT just visually, but having the indicator just kind of help expedite that for me sometimes is a good thing. And this is another reason why I use the TTFM indicator, because if there is a C2, it's gonna show me the C2 here, which will just give me more confluence that I can add in my journal that, oh, there was a C2 confluence. But I love that there's the SMT feature, and the SMT thing on this is like very powerful. I've tried a lot of different SMT indicators, but this one is amazing. So great job to Toodegrees and the team. But I noticed that there's also SMT here, right? So the fact that I know now that there's SMT here, this has given me high conviction that this trade has potential to work out. And then sure enough, let's see what happens. So you can see here, TP1 hits. Immediately when that happens, stop loss goes to break even. I'm now in a risk-free trade. Okay, I've already closed off probably like probably about 30% here. And then by the time price hit this, I was already out 50%. Now the thing for me is, as all this wicking started to happen, and I personally did not like what I was seeing here, and whatever happened to me in that first trade, which was located right here, was in my mind still, like I was saying earlier, okay? I wasn't happy with how I handled this. And because I wasn't happy with how I handled this, it impacted the way I traded this trade. So silly me closed the trade around here fully, okay? So I caught about, I mean, you're looking at this and it doesn't look like much, but what you have to realize is like, I caught 100 points, like almost 100 points. Like that's what I normally try to catch on a good day. And the fact that I caught something like that on a day like today, even though it doesn't look like much because the candles are so big, I had to remind myself, hey, this is 100 points. And it's okay. And then I looked at my trade of 8 and I'm like, oh shit, I already hit my daily goal. Like I'm actually up well above my daily goal, but I'm like nowhere near where the potential is. So then it was about risk management. Okay, right here, risk management. And a part of me thought to just keep my stop loss at break even, but that would mean then if this reversed and took me out, I would then be below my daily goal for the day. And I didn't, I would not have been happy with myself because I fumbled this. If I had not fumbled this and I had taken TP here, I would have already been way over my daily target for the day, which means that my stop loss would have been set to break even and I would have been okay with it hitting break even because I already reached what I wanted to reach. I'm okay. And I would let the probabilities play out. That's the way I should have dealt with this. Okay? And I'm exposing all this and I'm sharing, I say exposing, but I'm revealing all this because this is the reality of trading, in my opinion. These are the types of things that are going to happen to all of us. If it's not happening to you, then you're better than me. So I have my targets laid out. I know where I want to go. I know what I'm looking for. You know, if price were to hit up here, like that's 200 points. When you're looking at this chart like this, given that price has dumped 600 points, this doesn't even look that big of a move, right? Given other days on NQ. So I exited prematurely. I'm looking at ES. Let me just hit play on ES here for a sec. Okay, so you see what's happening here? That's this right here, right? This also deterred me, not gonna lie. So I'm starting to see reversals things here. You could see why I would start to get skeptical about the position, start getting antsy, right? So when I start seeing this, I'm like, oh man, and I already know we're in a higher time frame. I don't know what's gonna happen, right? Like a day like today was not really a normal day. So looking at ES also made me think, oh man, I should just be grateful for what I have. My goal was to reach X amount of dollars. I was over that. I'm grateful I got it. But if you look to the left, which is NQ, NQ ends up flying all the way to where I wanted it to go and more. Almost 260 points. Actually, 260 points it ran. Did it go any higher? Yeah, it's still going higher. So there's no telling what price is ever going to do. And this is a reminder of why you got to stick to your system and your model, right? And what happens is when you're in trades like this, then you can just leave runners, right? You secure your profit, you reach your goals, and then you let your runners ride. Because you never know if you're going to catch a monster move, right? And what's crazy is a day like today where there was a 600-point move the other direction, to be able to catch a reversal right where it's reversing, because and the indicator's showing it to you. Now keep in mind my settings are adjusted to show it, but it just credits how powerful the indicator is, and it credits how powerful the system is. Once again, like I said at the top, the biggest problem you're going to have is yourself, right? The biggest problem you're going to have is yourself. And this is where you have to really start relying on your journal, right? You got to really start relying on the risk element. Sometimes you got to risk it for the biscuit, man. Like you got to risk it. And today I decided to not risk it, and I should have. And that's okay. Because now I know the next time this happens to me, I'm going to remember today and I'm going to go, you know what, this happened to me today. I journaled about it. I had a full live stream talking about it. Like, I'm not going to forget this now. So just wanted to show an example of what happened today. It was a beautiful trade. And also, as a reversal trader, I'm used to standing in front of freight trains. I'm used to it. This was a mega freight train coming down. And I tried to take a long here, and I took a long here. This would have been a base hit winner and a break even. This ended up being a big winner for me anyways. Okay, and that's the thing about reversal trading, is when you start seeing this, you don't get afraid. You just wait. You already have the levels marked off. I marked these off like I showed you at the beginning of the session. And look at how price reacts to them, right? Even if it blows through it, that's fine. That's cool. Just wait. Wait for this. Wait for clean price action. If you don't see it on the 1 minute, if you don't see it on the 1 minute, I didn't see it on the 1 minute, I'm going to move up to the 2 minute. If I don't see it on the 2 minute, I'm going to move up to the 3 minute. Even though the 2 minute's also showing me an entry here, like I said, I didn't like the size of what I was seeing. I still entered on the same level, truth be told. So it's all good. Waterball says set profit targets and move to break even is brilliant in my opinion. You know, it's just about risk. I think if you're trading a model like this, where it's fast paced, you know, you're hitting TP in minutes, right? Like I entered this trade and my first TP was literally within 3 minutes later. My next set of TPs were within 10 minutes later. And I end up closing the trade after 24 minutes, because keep in mind, this is a 3 minute time frame. But like, whatever that dollar value is to have made in that, even in that short amount of time, it's like if I think about my day job, about how many hours I have to work just to make that same amount of money, it's insane. It's not 20 minutes, I'll tell you that much. Like, it's not 20 minutes. You know, people can make a week's pay, a normal person, whatever they get paid in a week, you could make that literally in 12 minutes because of the skill you know. I swear, I tell my wife this, I tell my kids this. This is one of the like biggest guarded secrets, in my opinion, of how to make money. One of the largest secrets. And it's not easy, of course. But once it clicks, you'll start thinking like the way I'm thinking. How much should one risk on eval per trade, and how many trade one should take? Well, it all depends on the evaluation you're on, okay? Shadow, I'll get to yours in just a second. It all depends on the eval itself. So I'll give you an example. If you have an Apex eval, they have them on for like what, less than 20 bucks right now, and then it's like 75 bucks if you pass the lifetime PA fee. So you're like $85 or whatever. No, $95, just under 100 bucks. The thing with Apex is Apex has a 1 day pass. So if you have a 1 day pass, like, you should literally be just risking the whole thing. So for me personally, my favorite types of evals are the 50Ks. I just find trying to get to, you know, $3,000 is it just suits me better. And you could do a lot of damage with 50K, but with 50K, you only need like, I think like 40 points maybe to get to $3,000. And that's not trading the mini, that's not trading the micro, that's trading the mini. So like 40 points and there's an eval pass. That's this right here. My TP1 would have been an eval pass, if you think about it. One trade, 3 minutes, eval passed. If you're trading something like Take Profit Trader, they require 5 days, and they require a 50% consistency rule. So in those types of situations, you know, you have to figure out how you want to trade 5 days. Do you want to take two trades that get you $1,500, right? And then that gives you 3,000, and then you just kind of like, what's the terminology they use? When you just kind of take like a blank trade. The word is I'm losing the word in my head. But you just take like a 1 micro trade and you'd open it for like 5 seconds, open and close. Wash trade, excuse me, that's it. It's called a wash trade. You just take 3 wash trades in the next 3 days, and then your eval's passed, right? So it just depends on what your eval looks like. If you have a 2 day pass, no consistency rule, well, there you go. You got to take 2 trades, right? especially if they don't allow the wash trade. So it just depends. I think the faster you're able to just pass the thing, the better off you're going to be. So now if you're unfunded, well, I mean, this is where, with your 50K, this is where this starts coming into play. Like, I would be risking between $200 to $400 for sure. Right? Say 400 is full, 200 is not full. Like, you got to go for it. That's the thing with this trading thing is like, and what I've seen with a lot of people, and I'm guilty of this too, is like you trade and you trade very well, you get funded, and then when you get funded, you stop trading the way you traded when you were on eval. You're all of a sudden scared. You think you have to take your foot off the gas pedal. Oh, I'm just going to take my time. Clock's ticking. And I'm not trying to say this to scare anybody, but it's like, whatever you did on eval, which, you know, you lit a fire under your ass to do that, you got to have that same fire when you go to funded. You can't be scared, you know? As Penta says in WWE, cero miedo, right? No fear. And like, you can only have that if you believe in the skill you have, if you believe in the system you have, if you believe in everything you've put together and you've spent years working towards. Like, what's the point of doing all that if you're not going to take that risk, right? And like I said, this is one of the, in my opinion, one of the most guarded secrets to making a lot of money that I've ever seen. Like, I look at those other guys that are flashing how much they make, and I'm just like, wow. You know, even a day like today, where maybe someone caught some of this move, like, depending on how many accounts they're copy trading, like that could have been like a $30,000 day, right? So anyways, let's wrap it up here. We pretty much got through everything. We got through the TP and the stop loss management. IFVG Pro Plus indicator, amazing indicator. Once again, I just kind of put this slide together. I will also share the slide. The other thing I wanted to share with everybody is a trading journal. So I'm going to just go into the chat quickly on my computer. Josh, I really appreciate your time today, man. Thanks for having me. Let me. Thanks, bro. I appreciate that. I appreciate everybody's time today. Like I said, this thing is recorded. I'm going to get it set up on YouTube and shared for everybody. I will also share the PDF in a sec. One other thing I wanted to say was in the PDF, I didn't show it, but I also have my system rules here. Right, this is A+. This happened not that long ago. Beautiful trade. Everything we talked about is here. And then if you want to find me on social media, if you just want to like talk shop or whatever, I'm on Twitter. I'm obviously on Discord, and I just started Instagram actually not too long ago. Starting to slowly put things together. You know, giving and showing more more power of what the IFVG Pro Plus indicator can actually do, as you can see. So I got posts sharing similar things, right? So look out for that. Also got stories where I'm sharing a lot of the things, like, you know, you hear me talk about things ad hoc or just like off the top of my head. I have thoughts like this sometimes, and I find it's easier for me to creatively put something out on Instagram versus Twitter. And Twitter is pretty toxic, so I prefer Instagram. I'm not in it to get like 1 billion followers or whatever. I'm doing this because I have a passion for trading, and I love kind of doing creative stuff like this. So it's there for you. And like I said, I really appreciate everybody's support. Yeah, my links are all here under the link tree, which you can get through the link in my bio for some deals and access to the IFEG Pro Plus indicator as well as the TTFM. I'm sure there's probably going to be discounts coming sooner or later, right, Josh? Hopefully, for people to Mhm. For sure. So, but thank you so much, everybody. Thank you, Josh. Thanks, guys. Thanks, Josh. For sure. Thanks. Take care. Peace.